Good day everyone, we are Group 5 from the Archdiocese of Zamboanga and we are here today to do a case study. The title of our case study is Aspiring Entrepreneur Ivana Halave. So today's agenda is first to analyze the given questions, recall past lessons, answer the given questions, and include additional accounting information. Alright, let's start with the first problem. Suppose that the Halave used her own maintenance crew to build an additional wing on her existing facility. What would be the proper accounting treatment of the following items? So first, architect's fees. Well, an architect will be responsible for the design and decision making of the construction. As licensed professionals, they are in charge of public safety and project management. Now, Engineer Ivana Halave needs to pay an architect for the construction of the additional wing to be designed and planned properly. The architect will render service for the business, so therefore, it is an expense, specifically a professional expense incurred by the business. Now, like any other expense, of course, this is a debit account. So the second one is cash discounts earned for prompt payment on materials purchased for construction. Cash discounts are commonly used to encourage the buyer who bought something on account to pay promptly. The buyer will receive a cash discount based on the agreement or terms of the seller. Since the business is the buyer, the discount received by the business is called a purchase discount. It is a credit balance and it is deducted from construction materials in the income statement. So, the next one is interest on money borrowed to finance construction. Since the business borrowed money from a creditor or a bank, they have to pay an interest based on the terms agreed upon. The cost incurred by the firm is called an interest expense. This is an expense account, so once again, it is a debit account.
Next is the cost of mistake made during construction. Assuming that it is covered by an insurance, it is only an insurance expense. However, if it isn't the case, it is a construction error expense. Nonetheless, it is an expense incurred by the business, so it is a debit account. Next is the overhead cost of the maintenance department that includes supervision. The overhead cost of the maintenance department that includes supervision, depreciation on the buildings and equipments of maintenance department shops, heat, light, and power of these shops, and allocations of costs for such items as cafeteria, medical office, and personnel department. All of the overhead costs are expenses incurred by the business. They are an example of accruals. All of these are expenses that are debited in the income statement.
Our problem number 2 is, suppose Halave purchased a new machine. It is clear that the invoice price of the new machine should be capitalized, and it also seems reasonable to capitalize the transportation cost to bring the machine to the facility. The new machine is heavier than the old machine it replaced. Consequently, the foundation under the machine has had to be strengthened by the installation of additional steel beams. Should this cost be charged to the building, added to the cost of the machine, or expense, and why?
Yes, this should be charged into the machine's cost because the installation of the beam is required to perform properly. All of the costs incurred placing a piece of machinery into service essentially becomes part of the cost of the machinery.
The installation of the machine took longer and was more costly than anticipated. In addition to time spent by the regular maintenance crew on installation, it became necessary to hire an outside engineer to assist in the installation and in working out the bugs to get the machine running properly. His costs included not only his fee but also his transportation, hotel expense, and meals. Moreover, the foreman of the department and the plant superintendent both spent a considerable amount of time assisting in the installation work. Before the new machine was working properly, a large amount of the material has been spoiled during trial runs. How should all of these costs be treated and why?
Hiring an outside engineer is a professional expense incurred by the business, and the transportation, hotel expense, and meals are reimbursement expenses. Assuming that he or she used his or her own pocket money but later on paid by the business for all the expenses incurred by the hired engineer. Now, the abnormal spoilage are treated as an expense since it is incurred during trial runs. All of these expenses are a debit account.
In addition to the invoice price and transportation, it was necessary to pay a state sales tax on purchasing the machine. Is this part of the machine cost? Why? Sales tax is usually added to the sales price of the machine and charged by the seller to the buyer. However, Halave may also treat the tax as a debit account. As such, she first needs to determine the sales tax paid after determining the value. She may debit it as an overhead expense or sales tax expense. In connection with payment for the new machine, the machine manufacturer was willing to accept the Halave's old machine as partial payment. The amount allowed as a trade in was larger than the depreciated value at which the old machine was being carried in the books of Halave Company. Should the difference have been treated as a reduction in the cost of the new machine or a gain on disposal of the old one? Why? It should be treated as a reduction in the cost of the new machine because it is considered as a partial payment by the machine manufacturer. The business didn't gain anything except for the reduction of the payable in the new machine. Mistakes are a fact of life. It is the response to the error that counts. This quote is from Nikki Giovanni. Thank you for listening. Once again, we are Group 5 from Diocese of Zamboanga, and we hope that you learned something today. Bye!